Hi everyone, and welcome to this week's edition for CMC Markets. I am Mish Schneider, Chief Strategist of marketgauge.com, and today's date is May 14th, close of the market. We saw the PPI come out. We have CPI tomorrow. So right now I wanted to start with sugar just for the very reason is that wheat has bottomed, corn has bottomed, soybeans have bottomed. Obviously the metals are all doing really well. We'll have a look at all of that. Natural gas seemingly has bottomed. But this is a commodity that I've always used as a barometer for inflation. And so with the constant stories now about the potential for stagflation, even as the market is about to make new all-time highs if you're looking at the SPX, this really might have finally seen its key reversal. So that's why I want to point it out. How will we know? Well, number one is you would absolutely have to have tomorrow a close over 19.16. That's number one. Number two is once we get into all this consolidation here, and we're talking at around 1945, once you get to that 1945 level, if we can not only clear 1916, but then get through 1945, I think that would be a good start and a very possible opportune moment to see if this has the means to get back up over 20 and beyond. So keep your eyes out on the sugar market. With so many different stories about whether or not countries that are big oil producers will continue to keep the production cuts or not, and some conversation with that, the United States announcing that they're not going to be refilling their SPR, but at the same time producing plenty of oil and gas. It's no surprise that after I spoke with you all last week, we're still sitting here at around $78 a barrel in the crude oil West Texas. And remember, I said we were looking maybe for a move down to around 75. So as we look here at the chart, what we can see right now is that we've gotten a tremendous amount of support here at this $78 a barrel, and it's holding. So if it continues to hold, then of course the next obvious place to be looking, it would be at the 200-day moving average, and that would take out all of this work that it's done over the last couple of weeks. So that number would be 80.30. We get back through 80.30, then of course we're going to have resistance on the way up. We're going to have resistance at 81, and then back up at the 50-day moving average, or just shy of, well, just above 82. So that would tell me that this sort of head and shoulders top that we've seen, which really measures from 81 to 87, about $6 down to around that 75 level, didn't quite make it. Now, on the flip side, of course, if we break down under 78, particularly on a closing basis, then I would feel more inclined to say that we may make some stops along the way. Perhaps we make a stop at around 76.85. We make a stop at around 76. But ultimately, it would be close, doesn't have to be exact, at around that 75, or let's say the last low we've been down here, which would be at 75.53. That would be, I think, the target to the downside. And I would imagine that that would be the end of this correction. Now we're taking a look here at natural gas, and it was very, very clear that once we got through all of this consolidation that really went back in time to February, that we would see follow through, and that's exactly what's going on. And now your major support area is really going to be up at around these highs here at around $1.98 to $2. So that's the number that needs to hold. In the meanwhile, we also said that it needed to get through 220. It did, but that 240 was going to be the ultimate goal to really test to see whether or not this has more legs to the upside, because that's really now where you start to see that 200-day moving average come in. So for now, momentum is certainly on the side of this going higher. 210, I would say I'd make that more of my pivotal area, obviously 2 being the ultimate support. And then, of course, if we can get back over where the close was yesterday, which was at around 224, even though we closed just slightly under it. I'd call that my pivotal point above 224. I think we start to make that case for getting up there. Of course, there's resistance all the way up, but eventually testing that 240. And below 224, where it closed today at 222, then it's possible that we may have to make another trip down to 210 before we get some new fundamentals to support the fact that natural gas has indeed bottomed. Now, one thing I feel very good about is when I did the video for you last week, we talked about platinum. And the reason why is clearly what we're seeing right here, which was that it looked like after this whole big pattern that it was getting ready for some kind of a parabolic move, and here we are. We have made nothing but a parabolic move since last week's video. So where are we at right now? Well, obviously 1,000 below, that's the big support area, but I would say we probably have closer support up at around 1,015, and if we wanted to take that even higher, you could look at this high the day before at around 1,020. We got up to 1,042, which means now we must go back in time. And the last time we were trading at these levels was in June 2023, almost a year ago. So this certainly makes the case for the inflation part. So if you look back and you see this whole thing, this looks pretty explosive. Really, we have cleared now a base that goes back to not only a year ago. So going back to the immediate charts here, and some history, above this level of what we saw today, our next level of resistance comes in at around 1,060. I'd say the better resistance comes in up here at around 1,075. That would be the next target. And of course, what would make me change my mind at this point would probably be if we get a break and a close under this bar here, or the high of 1,020. So next up is silver, and still very, very bullish in the silver market. It does seem like it's taking some time to consolidate here, maybe possibly a right shoulder and an inverted head and shoulders bottom, with a neckline really coming up here at around 28.85. The point is that above 28.85 to 29, I don't think next time it stops at 30. I think we're going to be taking a trip up to 32. That would be the next target. And again, from a nearer term standpoint, 28 is the big support. Also, as I just mentioned, we have some resistance here up at around 28.75 and then 28.95 and then 29. But I would call the pivotal number on this really would probably be where this opened today at 28.20. So below 28.20, we might have to do a little bit more work. I would even say it's possible we get back down to 27.60. Above 28.20, I'd keep my eye on these two highs here, this one being 28.75, and then I would look for that move not only over 29, maybe we get a little resistance up here, but I'd say 30 and then on to 32. Now, gold's formation is a little bit different, but two things that are really important to understand. Number one is silver is outperforming gold. That is inflationary. Gold miners are also outperforming gold, also very inflationary, and tends to lead the gold market up. Now, the gold kind of did its job already, but it looks like after an inside day today, very simply using inside day rules, it clears over 23.63. Then it would most likely follow up to the upside, and it seems like this might be due for a big day. The volume has been kind of light, and of course, as I mentioned, we have CPI tomorrow. So at 23.92, maybe a little resistance. Looks like we never got a close above 24. Obviously, if we get a close over 24, we're upward and onward. If we cannot get through this high here at 23.65, 23.63, that area, then we now be looking at the low here at 23.30. Below 23.30, yeah, I would think that gold is going to start showing signs of disappointment. Maybe that impacts the other metals, but that would be really where I might get a little bit more cautious in the precious metals, and that's of course with copper aside. And then we'd be looking at 2300, and of course here's your 50-day moving average at 2275. I just want to sneak a quick look here at orange juice, because this is based on weather issues with Brazil and talk about your parabolic move. That's why it's so important to watch these commodities. We're not quite at the high yet, but we are near 38-year highs. So keep your eyes on that 435 level, because if we take that out, then it could mean that this thing will start to look the way cocoa looked a couple of months ago. Okay, just for consistency purposes, let's take a look at the USD JPY. There's been a lot of concerns. More importantly, people are using this 156 as the pivotal point. After we had that correction, of course, the yen's been going straight down against the dollar, although the dollar in and of itself is actually trading a little bit weaker. So, this 156.44 level that you see, this line here, is extremely important. We could say even 43, because you can see it's the close here, the open here, and now the close here today. So that makes this pretty darn easy. Above 156.44, then you have to say the dollar will continue to strengthen against the yen, and of course we'll see where people start to get nervous about a falling yen. However, if we break down under that 156.44, particularly if we get back down under that 146, then it's possible the yen will start to get a little bit more supported, in which case now we'll be looking at a move down to around 155, 154.75. And the last chart for today, this is the SPX 500 cash chart. And look how pretty that looks. Here's your all-time high here, with today's close at 5,243. So there you go. We get through this level, particularly I'd say even before that. Notice how nice this lines up with these two highs here, this low here, and then this low before we started to see this correction. So this 5,244 is our perfect pivotal point. Above, I would say, with just a sneeze away from all-time highs, there's no reason why we can't make that. But yet, if for some reason CPI runs hot and we start to see this come in a little bit lower, then 52.44 will be your resistance. In which case, look at these two doji days we had right before. Then you would be looking at 52.20, and then of course at 5200, and so on until we worked our way back down to the 50-day moving average. Okay, that's it for now. Hope this was helpful. You all have a great trading day, great trading week, and I'll see you all next week. Thanks so much for watching.